Hello students, in today's video we are going to discuss about the next method of calculation of purchase consideration, that is shares exchange method. So let us see how to calculate purchase consideration under this method. So under this method, the transferee company issues its own shares to the shareholders of transferor company on the basis of certain ratio. So in this method what happens is the transferee company means the purchasing company, the company who is purchasing the business of other company or companies, issues its shares to the shareholders of transferor company. So here basically shares are issued to the shareholders of the selling company on the basis of certain ratio. A ratio is determined, and on the basis of that certain number of shares will be issued by purchasing company to the shareholders of the selling company. Now there is no fixed ratio which is set. Any ratio is applicable which is agreed by both the companies. It can be 2 is to 3, it can be 4 is to 5, it can be 10 is to 31. Any kind of ratio can be fixed. Now it completely depends upon the companies, okay, that what will be the ratios. Okay, so a ratio will be given to you. On the basis of that you are going to calculate purchase consideration. Now one more thing, let me just remind you, is that while calculating purchase consideration we consider only the payments that are made to shareholders. Any other payments which are made to others like debenture holders, creditors, or any other party, that will not be considered while calculating purchase consideration. Okay, that will be considered later on in the problem. Okay, but when we are calculating purchase consideration we should take care that we will consider only those payments which are made to equity shareholders. So in this method specifically we are going to calculate purchase consideration on the basis of a certain ratio that will be given in the problem. Now let us solve a problem and understand this method in a better manner. Okay, so this is the problem. Tata Limited acquires the business of India Limited. Tata Limited allotted 9 shares of rupees 100 for every 20 shares held by the shareholders of India Limited. India Limited has equity capital of 50,000 shares of rupees 100 each. Calculate purchase consideration. Okay, now let us try to understand the things that are given in the problem. Tata Limited acquires the business of India Limited. So here Tata Limited is purchasing the business of India Limited. So Tata Limited is the buying company, the purchasing company, or it is called as transferee company. Okay, and the business of India Limited is acquired. So India Limited is transferor company, or it is the selling company. I hope this is clear. India Limited is purchasing, India Limited is the selling company and Tata Limited is the purchasing company. Now let us see what is the deal between the companies. Tata Limited allotted 9 shares of rupees 100 for every 20 shares held by the shareholders of India Limited. So what now Tata company is saying, that for every 20 shares which are held by the shareholders of India Limited, the company is going to issue 9 shares. So this is the ratio. For every 20 shares in the selling company, that is in India Limited, you will get 9 shares in the new company, that is Tata Limited. So this is the ratio, 20 is to 9. I hope this is clear. Okay, it is issuing, and the amount of shares is 100. Okay, value of one share is 100. So for every 20 shares in India Limited, you will get 9 shares in Tata Limited. That is the meaning of second sentence. So India Limited has equity capital of 50,000 shares of rupees 100 each. Okay, so the actual capital or the number of equity shares of India Limited is given to you, that is 50,000 shares. So you have to calculate purchase consideration. Now for calculating the amount of purchase consideration, first you need to calculate the number of shares that will be received by the shareholders of India Limited. So for that we have to calculate the ratios. Now let us see how to do that. Now here there are two companies, India Limited and Tata Limited. India is the selling company, Tata is the buying company. So the second sentence is that for every Tata Limited allotted 9 shares of rupees 100 each for every 20 shares. So look at this. In India, if you are having 20 shares, so in Tata you will have 9 shares. Okay. So what is the actual shares of India Limited? There are 50,000 shares. You can look at the third sentence. So for 50,000 shares, how much shares will you get in Tata Limited? Okay. So in India, if you have 20, you will get 9 in Tata. The actual shares are 50,000. So for 50,000 shares, how much shares you will get in Tata Limited? So let us start with the calculation. Purchase consideration is equal to 50,000 into 9. We are just doing simple cross multiplication. So 50,000 into 9 divided by 20. You will get the number of shares. So the number of shares will be 22,500 shares, and the value of every share is 100. So if you multiply 22,500 into 100, you will get the amount of purchase consideration. So the value of purchase consideration is 22,50,000. Very simple calculation. Only you have to understand the ratio. If you make any mistake in the ratio, you will get wrong answer. So try to analyze the statement properly. Okay, so that you can easily understand the ratio of the two companies and solve the problem. I hope the students have understood. Okay, with this I conclude for today. Thank you.